Hello, welcome to my channel. Today in this video we are going to discuss about life insurance companies, and we'll talk about what are the reasons for the underperformance of life insurance companies and what can you expect in the long term from these companies. So before I begin the video, let me give you the disclaimer. I do have some positions in life insurance companies, as well as I have made recommendations to some of my clients to invest in these companies. So let us talk directly about what is going wrong with these companies. Okay. So number one, on the policy front, the government has been making changes to policies. Okay. In the recent budget, the government has announced that all the policies above rupees 5 lakh premium per year, which are purchased after 1st April 2023, they will come under the tax bracket. Now, what this essentially does is it reduces the effectiveness of insurance policies as investments, because earlier the high net worth individuals used to invest in these policies because they were giving tax free returns. Now, the government says that if your policy premium is above rupees 5 lakhs, then whatever is the income that is being generated from those policies, that income will be completely taxable. Okay, that's a very big negative for life insurance companies. And you must have seen that after the budget announcement, these companies have significantly corrected 15, 20, 25% depending from one company to another. Secondly, you see on the on the policy front, there is one more change which is expected. So there is a new insurance bill, basically the insurance laws amendment bill, which is just expected and it's around the corner. So, among many more things that the insurance bill proposes to do, it says that they want to reduce the minimum capital requirement for starting an insurance company. Okay, so currently the capital requirement is rupees 100 crores. Now, what this is going to do is this is going to increase the competition in the insurance sector. So you see the number of players, newer players are going to come into picture, and because of which the share prices of these older insurance companies, basically the three private insurance companies I'm talking about, SBI Life, HDFC Life, and ICICIPRULIFE. So you have seen that the share prices of all these companies are under pressure, okay, in the last couple of months. And this is not just immediately after budget, but even before budget, you see the last 3 to 4 years, these companies have not performed. All right. And finally, this is one thing which is not very well factored into the price according to me. But you must have noticed that if you walk into a branch, okay, a bank branch, the branch manager is very interested in selling you insurance policies, right? He will try to sell you a unit-linked insurance plan, ULIP, or he will try to sell you some fixed income kind of a plan, or he will try to sell you an annuity plan if you're a retired person, right? Now, this channel is called as the bank assurance channel, where the insurance companies are paying commissions to the banks, okay, for selling the insurance product. So it is as simple as that. So RBI has taken a cognizance of the fact that some of the branch managers, okay, some of the banking branch managers, they are more interested in selling insurance policies rather than selling the traditional banking products like fixed deposits and loans. Okay, so how does it impact? Number one, the funds are being diverted from the banking system to the insurance system. It is in RBI's best interest to ensure that bank managers do the job which bank managers are supposed to do. Okay, so it shouldn't happen that bank managers leave their job aside and they become insurance agents. Okay, so this situation is something that RBI has started recognizing. All right, and secondly, RBI does not want people to be misled, right? So I'll give a very common example. You go to a branch, a bank branch, mainly a public sector undertaking branch. You will go there for a locker. You ask them a locker, they'll not give you a locker. They'll say that, okay, we'll give you a locker if you buy our insurance policies. So this is mis-selling. Okay, this is basically kind of a blackmailing, which RBI has actually taken cognizance of. So there are some talks in the industry that RBI may tighten rules for the bank assurance channel, and if that happens, insurance companies are going to lose, or rather they are going to face some kind of a they're going to face some kind of a setback on one of their biggest marketing channels, which is bank assurance. Okay, because after bank assurance, insurance companies depend a lot on agents for selling their policies. Okay, but bank assurance remains the top channel for all these insurance companies. That is why you see the three private listed insurance companies, ICICI, HDFC, and SBI. They all have their own banking units. Basically, these banking units are the ones on the basis of which these insurance companies have achieved a particular scale, right? Even you go for smaller insurance companies like Max Life or many other, okay, these companies have done their tie-ups with a lot of banks, right? So Max Life has a good tie-up with Axis. In fact, Axis kind of owns Max Life. Okay, so what I'm trying to say here is insurance companies have established their business and banks have played a very pivotal role in establishing that business. But if RBI decides to tighten the regulations for bank assurance, insurance companies are definitely going to feel the heat for that from that particular change. Okay, so are these problems short term or long term in nature, right? Let me give you some perspectives on that. Okay, so let's talk a little bit about the history of insurance in India. So, Life Insurance Corporation of India is still the largest as far as the asset under management is concerned. But over a period of last 20 years, okay, around 15 to 20 years, the market share from LIC has been moving away to private insurance companies like HDFC Life, ICICIPRULIFE, and SBI Life. Okay, so this is a very secular trend which has been observed, and it is expected that in the coming future also this trend will continue. Okay. Secondly, even if there is more competition, like I told you, the minimum capital requirement of insurance companies is going to fall. Okay, even if that happens, there despite that happening, the amount of the number of players in the market will increase and the competition will definitely increase. However, the older established companies are very likely to keep on gaining market share, and I'll give you an example. So recently, HDFC Life, around a year back, HDFC Life acquired Exide Life Insurance Company. Okay, Exide had a subsidiary in the form of life insurance company, and HDFC Life paid a handsome price to acquire that. So what is essentially happening that I'm sensing is newer players, even if they come in the market, it is not very easy to expand in the insurance business. Okay, and as we move ahead, I'll give you the reasons why I feel it is not very easy to keep on expanding in the insurance business. So basically, what I'm sensing is that this is a game of survival of the largest. Okay, so a large player, a player who has started his business earlier, like these three companies that I'm telling you, they have achieved a particular scale, and even if new players keep coming, I think there will be a consolidation in the industry where the older players will keep on buying out the newer players, and the number of players will keep on shrinking. Okay, so it is a game of betting on the big players, is what I feel. Now, again, talking about the short term or the long term nature of these problems, see, insurance as a business, it gives profitability in the longer term, and the reason why this happens is because the cost for insurance companies are always front loaded. Now, what I mean by that, front loading of cost means that the commissions that an insurance company pays is a significant proportion of the overall cost of an insurance company, and as soon as a policy sale happens, the insurance company has to pay that commission to the agent. Okay, and the profitability, if we talk about the revenue recognition, if we talk about, see, if you pay a certain amount of premium to an insurance company today, the company is not allowed to recognize that entire premium as revenue in the very first year. Okay, the rules of accounting of insurance companies are complex. I'm going to make a detailed video on that, but today I'm just introducing you to this particular concept. Okay, so the rules of accounting of insurance companies are complex, they're not very simple, and because of which the revenue recognition, it happens over a period of time. Okay, let's say that there is a policy of 30 years, of tenure 30 years. So at the end of 30 years, the insurance company is going to record complete profitability because the person has not claimed. Okay, so it is a business where the costs are going to be incurred initially, but the profits are going to be accrued over a long period of time, over 25, 30, 40, 45 years, as you know, whatever is the policy term for that particular policy. Okay. Secondly, a very big positive which I feel long term positive for insurance companies is, see, the medical practices or the medical facilities in India are expected to improve as the GDP improves, as the per capita GDP improves, more people will be able to afford insurance, health insurance, right? And because of which life expectancy is going to increase. That this is definitely going to happen in India. Now, if life expectancy is going to increase, most of the people who are today getting themselves covered for 65 years, 70 years, 75 years, 80 years, they are not going to put a claim on life insurance. Okay, of course, if some catastrophic event like COVID happens, then definitely insurance companies are going to face big problems. But we have a concept of reinsurance or reassurance for that. Okay, let's not get into that right now. So, talking about the risk now, what are the biggest risks for an insurance companies? Now, let me give you an example. So in Japan, if you see, in the last about 25 to 30 years, a lot of insurance companies have failed. Okay, these companies have went insolvent. Basically, they were not able to sustain financially on their own. Why this happened? Because insurance companies, they promise a certain fixed returns to their policyholder. If interest rates stay down for a sustained period of time, insurance companies make lesser money than what they have to pay their policyholders, and eventually they sink. Okay, something like this happening in India, I don't foresee, at least in the next 25 years when India will be in a growth phase. Okay, till the time a country is in a growth phase, interest rates staying sustainably, or interest rates staying substantially down is a low probability event. So I think at least for the next 20 to 25 years, we are away from this kind of a risk, at least in as far as the Indian insurance companies are concerned. So that's all I have for now. Thank you very much. If you like the video, do press the like button, subscribe to the channel, and do not forget to check the 3 small case portfolios that we have. Thank you.